Welcome to the Zacks Roundtable Review, a discussion of current events affecting investors as well as other topics of financial interest, featuring the analysts and editors of Zacks.com. It's been a fairly long road from Dow 6,500 to 10,000, but is the whole picture all that rosy? Our panelists weigh in. Editor-at-Large Steve Reitmeister, Senior Market Analyst Charles Rotblut, and Top Market Technician Kevin Matris. So over the past weeks here, months, you guys have really done a pretty good job as far as pointing out why conditions are getting better and kind of giving us some guidance here as to things that we should look for and things that make sense, et cetera. But, you know, we still have, we've got a stock market that has a pretty decent picture to it, and then you've got an economy that has kind of a questionable picture to it. So put all that together to make up the whole picture, Charles, it's not really all that rosy, is it?
It's not. One of the things that worries me still is housing. A friend of mine who's a realtor told me what he's seeing a lot of people doing right now is they're getting those FHA loans where you can only put down 3.5%, then take an $8,000 first-time homebuyer's credit, pocketing the homebuyer's credit, so all of a sudden they're moving into houses they really can't afford with really no money down. And I'm worried about that's going to have repercussions down the road. I'm also worried we have a huge wave of adjustable rate mortgages that are about to refinance. That's going to cause people problems, not to mention what's going on with commercial real estate. And you mix all this in together, and it's funny because all of a sudden you're not really hearing anything about those toxic assets, but it sure doesn't seem like we've really solved the problem either. So you have this huge real estate problem that really scared everybody to death early in the year. It really hasn't gone away. It's been kind of brushed under the carpet, but you are seeing a lot of foreclosures. You're seeing stories about banks not even showing up to the sheriff's office. They're filing for foreclosures, but they're not actually sealing the deal. So you have these houses in limbos, having these houses in limbo, and it does worry me that we're really looking at a long overhang for real estate. Even though we have seen an improvement in existing and new home sales coming off the bottom, I do worry it's going to be a long overhang for the economy and really take us several years to get out of this mess.
Yeah, I see a lot of empty strip malls these days, and I don't even travel that far. You know, I go to the corner for lunch meat. That's where I go. Kevin, I know you're not popping the champagne corks yet either. There must be one or two things that concern you.
Well, let me say this. You know, Charles just said something about mortgages being reset. And what's very interesting is that for me personally, I have a 5-year ARM. I got it, I think, like maybe 6 years ago. I originally got it at 3 3/4. It had reset to like 4 1/4 or 5 1/4 over the last couple of years. But my mortgage just recently reset in August, and I got reset back down to 3.75. So a lot of these adjustables, the interest rates being so low, this may actually turn out to be very beneficial to a lot of people who are just on the cusp of being able to not afford their mortgage. So what Charles brings up is very interesting, but in my case, and I'm sure there are millions of other people out there who are going to be very pleasantly surprised when their mortgages reset. So interesting to note. The things that I worry about, though, is there's three. You have the falling dollar. The falling dollar has been very beneficial to the stock market recently, and there has been a perfect inverse correlation. However, if you were to see the dollar free fall, I think that ultimately would have a negative impact on the economy, and it ultimately is going to have a negative impact on stocks. The other thing I worry about is energy prices. It is true energy prices are 50% what we were from the highs, but they are 3 times what they were from the recent lows. And if energy continues to go higher, this is going to turn out to be a very, dragging tax on a lot of businesses who are struggling to come out of this recession.
You mean oil strictly?
Yes, oil, you're talking about gas, it costs a lot of money just to be able to run your businesses. And if you have to pay that much more money, that's going to have an impact on your hiring concerns down the road and all this other stuff and on your margins. The other thing, too, is consumer spending. We all have to stop and remember that 70% of the economy is tied to the consumer. If the consumers are continuously feeling the pain, that also is going to have a drag on the economy and ultimately have a negative impact on the stock market. So those are my worries. I'm not saying that all of those things are going to come to fruition, but those are the boogeymen out there. But at the moment, I'm still optimistic.
Anything on the technical side?
Technically, I think the market still has the ability of getting to 10.8 and powering to 11. That's what I see.
All right, not to mention those nagging unemployment numbers that keep hanging overhead.
Yeah, I mean, I have to agree with every single point that these guys have put out, and this has been the stuff that's been generally in the news. That and some of these items have been swept under the rug, like the toxic assets. So, is that still a problem? Yeah, that's still a problem. They still exist, and from what I understand, there's still not that much buying activity in the what they call it, the PIP program.
Right.
That there's not that much activity going on. So here again, has pricing been established? Are they sound investments or getting more sound? That's still to be a question. But I think that the simplest way to put it together is, here again, Kevin wanted to talk about things that recently happened to him with his mortgage. So I'm going to talk about my car here. Okay, so my car, the battery died, and so I had to get a jump. So I could falsely believe that when I got a jump that my car was fine. Hey, it's running. Okay, that jump is stimulus. Right. So it's a government stimulus. Hey, my car's running fine. And once I turn off my car and I try and start up the next morning, it doesn't start. Right. And so the concern is that we have all this government stimulus, and yes, a lot of it hasn't even been applied yet. Okay, it's still a lot sitting out there. But once once the interest rates start going up, once some of these other stimulus plans, some of that money goes away, will our car start by its own when it's given the chance? And that's a question mark. Okay, and so that's the greatest concern for me.
Good analogy.
Because thank you very much. Here's that 20 I owe you. And going back to the consumer, okay, with that being such a large part of the economy, I believe there has been a generational shift. Like what people learned after the Great Depression, that hey, we need to learn within our to spend within our means, and so here again, that restarting the economic engine, consumers have pulled back, and I think it's going to take a long time for them to feel comfortable in spending at the levels they used to.
I remember a time when everybody was putting the blame on the consumer, that they're not living within their means. Boy, did that picture change in a hurry. So, Kevin, getting back to what we see going forward, what do you think is going to happen from this point, both with the market and with the economy?
Like I said, I still see the market getting to 10.8, even higher, because as I have said before, you take a look at where the market is now and the last time we were at this level, and I think the economy is in a much better position now than where we were back then. The things that I have been looking for, though, and really, really keenly watching is inventories. Inventories have been in a protracted decline for over a year, and what's interesting is that inventories are so lean, businesses are going to have to, at some point or another, start building back their inventories. And when that happens, I believe that is going to usher in a whole new second wave of economic growth. Getting to Steve's point about the stimulus, I think the economy is looking for another jump, and I think that's going to happen sometime next year. I think the first and second quarter of next year. That is supposed to kick in. I think over 60% of the stimulus is finally going to work its way into the economy. But if that stimulus doesn't have the stimulating effect like everybody had been hoping for, then you're going to see unemployment continue to remain at these high levels, and that is going to be a drag on the economy as well. But I think that there's still a lot of good things happening in the economy, and I am expecting higher prices. I still think 10.8, maybe even higher than 11 is going to be seen.
So by stimulus, you're actually looking for another stimulus program?
Not expecting another stimulus, although it's funny because you get a lot of people now talking about it. But the original stimulus, the majority of it has still yet to be enacted, and that's what I'm waiting to see happen.
Charles, what do you see happening going forward?
I'm with Kevin. I think there's still a bullish tint to this market, and I think traders do want to push it higher. It was curious last week that we did have some traders looking for perfection in earnings. We saw that in reaction to IBM, the reaction to Goldman, the reaction to Intel. But by and large, if you look at the numbers so far for Q3 earnings season, we're off to a really good start. Positive earnings surprises are outnumbering negative surprises by a margin of 6 to 1. We are seeing more companies beat than miss on revenues, although the ratio is smaller. But I do think overall we're still in this fear and greed market, and I do think traders want to push it higher. We haven't hit resistance on there. At some point, people are going to stop and do a gut check and trying to figure out what's going on with the economy and probably send us into a prolonged trading range. It's not a question of if, but a matter of when. But I think over the short term, if we start getting positive reaction to earnings news and stop having this expectations that numbers will be perfect, we could go higher. And I think tomorrow could be very telling, depending on how the market reacts to Texas Instruments, Intel, and even how people react to Zions Bancorp, since Zions Bancorp is really in the hardest hit of the areas affected by the real estate crunch.
By tomorrow, 10:20 is what Charles refers to, in case you're watching the calendar. Are there people, traders, investors, willing to take on more risk right now? Is that what we're seeing?
I think you've been saying that, and especially when you look at some of the stuff that's going up, it's pretty much across the board. People are looking to buy. Although volume hasn't been very high, we are seeing a lot of people still shift money in bonds. There are a lot of traders really betting on the recovery taking hold in next year being better than this year. So I do think there's a lot of greed, and I do think there's a bullish, as I said, I think there's a bullish tint to the market, and the trend right now is pointing higher.
All right, what's in your crystal ball going forward?
Yeah, I'm going to go in the camp that right now the market is fairly valued given the current earnings outlook. We'll know a lot more over the next week and a half here when we get the rest of the bellwethers out for the major industries, and we'll have a good picture of what happened in the third quarter and, more importantly, what their guidance is going forward. If it starts moving estimates higher, then the market should move higher, and I believe there is a bullish slant. So in the near term through the end of the year, I believe that we're most likely going to be going a bit higher. The question is, these boogeymen that we brought up, if they come to bear and there's this double dip recession or a muddle through economy, or we don't really get a strong economic revival, then that will affect corporate earnings, that will affect the valuations, and things will come to bear. So, the best case scenario is that all this stuff does work. The stimulus did restart the economy, and the economy goes on its own, and we start slowly and surely making our way back over the next 3-5 years to the market peaks that we saw in the past. If not, then we're going to have, it could be we go flat for a while, it could be go down. We have to see what really happens with the economy when some of this stimulus is spent and what the economy can do on its own.
All right, that's the latest thinking from these folks. And with everyone here, I'm Terry Ruffalo.